Today is May 5th, 2026. In this video, I'm going to use TradeWave and take a look at Dow Jones Industrial Average history and see how we can forecast based on history, basically. I am looking at Dow Industrial Average right now on TradeWave. I have selected 16 midterm election years. I selected PE plus 2. I can select consecutive years, but the fascinating part is when you look at the history based on midterm election years. Look at this, 81% of all the years, which is 13 out of 16 midterm election years, the date range of May 4th until July 3rd, let me make it May 5th, have been down. And you can see the forecasted trend right here next to the price chart that it shows. This forecasted trend is based on how it's done in average in the past. And it shows clear down right here until the day before July 4th. How about the stocks? I'm going to go to Dow Industrial Average. Dow stocks, Dow 30 stocks. And I've selected 6 years for a big reason, because the biggest cap stock of NVIDIA is also one of the ones that's really vulnerable in this date range from today until June 29th. Look at what they've done. In 2002, down 45%. 2006, 31%. 27% in 2010. They were pretty flat on 2014. They were down only nearly 5% in 2018, but in 2022 they were an AI giant by 2022. They still dropped 17%. And what are they going to do this year? Well, if they follow their history, this is going to be a down year. And I am very bullish on NVIDIA. If NVIDIA does correct, I would think that it would be the greatest opportunity to buy NVIDIA by end of the summer. But we have to wait and see if that will happen. I'm going to also switch to, let's say, 10 midterm election years. And switch to 9 out of 10. And by the way, I have selected 0 to 150 days because I only want to look at patterns that would end by end of the summer, because this October, end of September, beginning of October is the single most seasonally bullish time in the history based on past 100 years. It's so strong that I wrote a book and I named it after it, called The 100-Year Pattern. So I only want to look until end of the summer, and that would be around 150 days from now. So I have basically selected a day range no more than 150 days. Look at what comes right on the top is Caterpillar. And this is based on last 10 midterm election years, starting from 1986. They went up in 2014. They did not go up any other years from today until June 24th. You can also look at the overall trend chart and see the real statistical peak is in a few days, probably around mid-May, because you see that there's tiny peak here, and then it just goes down and it tanks for the rest of the summer till almost end of October. Amgen is a long one, a long opportunity, and actually it makes sense. It's kind of, you go to Amgen or Merck, it seems to be more of a defensive play while most other things go down. Look at this, Boeing, another down potential. However, there's a statistical peak right here sometime in mid-June. Coke and Procter & Gamble seem to be safe plays. They're long, but majority is short. But now here's the real fascinating part. If I select NASDAQ, I'm going to select 9 out of 10. Let's go to 8 out of 10. The reason I selected 8 out of 10, that means look for the past 10 midterm election years, and at least 8 of them have to be a winner. And by winner means if it's a long, 8 out of 10 have to be long. And if it's a short, 8 out of 10 have to be short before they show on this list. Look at what it does. It found only 18 opportunities, 6 longs and 12 shorts. Basically, 2 out of 3 are short opportunities for the rest of the summer. It couldn't find that many long opportunities. Again, Amgen is on the top of the list. Surprisingly, Intel is, no, actually, this is only 6 days long. You have to look at the number of days. So, as you can see, Intel actually is vulnerable. However, it has a tiny, tiny little jump right there. ADP is also, that's kind of long. Now let's just go to the big ones. S&P 500. Looking at the last 10 years, let's switch the last 8 midterm election years, which means the stocks must have 32 years of history before they show up on this list. Let's look at the bottom. 41 opportunities, 2 long, 39 shorts. 95% of the opportunities for rest of the summers based on last 32-year history is shorts. TradeWave could not find long opportunities. We can see which ones are long. Only 2 of them. Cigna Corporation, defensive play. Johnson Controls, apparently they are a defensive, although they have a huge down right here in September time frame. The rest are shorts. And look at the AI scores. MGM, another short one with a high probability of continuation this time also. DR Horton Inc., same thing. It's just so fascinating to me. You guys haven't seen so many of these charts. You do not see these consistent downs over and over, except in summers of midterm election years. I also wrote, I have a video and I wrote a book. In the book, The 100-Year Pattern, about sell in May and go away. It's all about midterm election years, but it's so strong that people mistakenly thought it's because of the summer. It's not. It's because of the summer of midterm election years. Other years, they are statistically the same as the rest of the year. Just take a look at Wilshire and see it follows. Look at this. 136 opportunities, 75 of them are short. If I look at 10 out of 10, 95% of them are short. 1 long, just 1 long. Which one? It's Johnson Controls. It's the only one that had 10 out of 10 years long. That's it. Nobody else did. If I switch to 9 out of 10 years, look at this. 136 opportunities, 102 short, 75% short. It just shows short. So all those super bullish people about the summer, I would be careful, at least this summer. But then again, you are going to be at the beginning of the 100-year pattern at the end of September, which I'm going to have videos. Please join this YouTube channel because you really want to know about the 100-year pattern. It is the single most powerful time to be in equities. And right now, it's a setup for that. All these big firms, all of the professionals, they are going to bring the market down to get ready to load up at the end of the summer. This is it for today. Happy trading.